My next guest is a gold expert extraordinaire. He wrote a best-selling book. This is an updated version of the bestseller. He's got all kinds of notes at the end of all the chapters. A lot of the stuff he put in this book, I don't know, a decade ago, it came through. And of course, the spoiler alert, you can see him right there. It's Mike Maloney of goldsilver.com. Mike Maloney, thanks for joining us today on usawatchdog.com.
Thanks for having me, Greg.
I've hit this vein of people. I don't really have one gold person on after another, gold expert, after another. Do a lot of finance, do some politics too. But I just feel this bizarre need to have gold people on because I think we're at an inflection point. I mean, they're hammering the price of gold. If it was such a bad investment, why would you have to suppress the price? Why would you have to keep your thumb on the scale to push it down? And the other thing is you're seeing this stock market go to the moon, and there's no there there with the stock market, and we have 0.5% GDP growth, and it doesn't look like it's going to break 1% unless Donald Trump gets some major stuff done with his tax plan. What's going on with gold and silver and the stock market and all that? What is your appraisal about what's going on right now?
Well, we're basically replaying 2007 right now. We're at an inflection point where I believe you're going to see the stock markets top out this summer. There's an old saying, sell in May and go away. And, when you do a study on that and you find that from October to April is where all of your gains are. If you add up from 1960, if you add up all of the periods from May through September, what you find is that there's actually a net loss during that period when you average all years from 1962, I believe, is the data that I saw last. And so all of your gains come from October through April. And that suggests that the stock markets will probably peak next month or maybe the month after, maybe the month after that. I think it's going to be around May. I think you're going to see some of the debt ceiling discussion come back into the news. And that combined with all the geopolitical tension that we have these days, combined with a stock market and a real estate market and a bond market that are all insane. We've got this crazy world where everything is at these valuations that are just impossible things. And that will cause a peak. And then we are way overdue for a recession. Recessions occur on the average every 4.5 years. And it just 2 months ago became the third longest economic expansion in the U.S.'s history. There's been 47 economic expansions and recessions. And this is now the third longest. And in 11 months, it becomes the second longest in history. So the chances of going into a recession sometime soon are very, very high. They're on the order of 90% or higher right now. And if it goes another year, it'll be like a 95 or 97% probability of a recession. And so when you couple all of these things, this insane overvaluation of the stock markets, the insane if you measure real estate, the Robert Shiller real estate index, what you see is that it's back into bubbles in most major cities. We're back up at not quite 2007 levels, but still we've got, in 2000 we had a stock market crash. In 2008, we had stocks and real estate. This time it's going to be stocks, real estate, and bonds. Bonds have been in a bull market for 32 years. No bull market lasts forever. Everything goes through cycles. And this has been just a perfect bull market for bonds. Sometime or another, interest rates have to rise. And whenever you manipulate, it builds up pressures and causes a greater reaction to the opposite extreme. And so the Fed has, ever since the inception of the Federal Reserve, they've manipulated the economy in general by controlling the quantity of currency in the system and the cost of that currency, the interest rates. And that is a manipulation. When men sitting around a table, just a few men, decide instead of the free market with supply and demand and the price discovery mechanism setting interest rates. You've got a few men deciding based on their slide rule brained calculations. These guys don't subscribe to reality. They live in this world of calculations, and they don't understand human action. The sentiment is, fear, greed. This is what drives the economy. This is what drives the markets. And right now, they're raising rates, and they're taking the training wheels off just as we're starting to hit bumps in the road. They had smooth pavement, and they kept stimulus going. All the world's central banks were creating all this stimulus, and now we've the 2008 crash, that was quite a while ago. It's 9 years ago. So we're at the point now where we're going to hit big ruts and bumps, and they've just taken the training wheels off the bicycle. They should have done that ages ago. The economy would be healthy. We have the sickest, lowest increase in GDP. This is the worst economic expansion, the worst recovery in history, the entire history since 1776.
Thank you, Obamacare. Thank you, Obamacare.
We've never had anemic growth like this. And this is a bought and paid for recovery. Ben Bernanke and Janet Yellen created about $3.4 trillion to buy us this recovery. And what did we get for our money? Nothing. I want my money back. With regards to gold, what I see, with all this geopolitical risk, with the stuff that's happening with North Korea, and we just dropped this the biggest regular, non-nuclear bomb in history in Afghanistan, and that was basically most likely a threat to North Korea. That's the reason we chose this to demonstrate this bomb was because of this very, very dangerous point in our history. I'm a baby boomer and a product of the Cold War. And, I can't think of a time since Kennedy and, the embargo on Cuba. And
Cuban
Missile Crisis. I can't think of a time that was this dangerous. And here's what worries me. Sales of Silver Eagles at the U.S. Mint are down about 60% year over year. And what I'm seeing is the people in the West are selling, which means they're taking the proceeds and going into the stock market. And they're getting in, and this is one of the problems with the average investor. The public tends to buy it at peaks and then sell at the bottom and take huge losses. And right now, gold and silver have been in a 5-year correction. This is basically still a bull market. It's just one of the phases of a bull market. But we have not ended this bull market yet.
How far off sales? How far off are the sales for gold and silver eagles? I know you know this. I mean, you were quoting some numbers that they're off. I don't know, 50% or so.
Well, say the U.S. Mint is selling 60% less than they did at this time last year, and that's huge. And what you're seeing is China and Russia increase their monthly purchases for their central banks every month. Right now, between China, Russia, and India, they're averaging purchases that meet or exceed all worldwide production of gold. And so that means
just 3 countries are getting all the production sent to them.
And whenever they exceed it, that supply has to come from somewhere, and it's coming from the West. When all is said and done, when the dust settles, the East is going to be very wealthy, the West is going to be poor.
Oh, it's good. We're going to take turns. This worries you that people are getting in at the top, and that all these sales. I mean, one of the sponsors on my site is Discount Gold and Silver Trading, and she says, "Listen, there's plenty of product out there. The idea that there isn't product out there is insane. There's tons of product out there. How fast can that product dry up if we do wake up one morning and we find out, oh, there's been a 1,000 missile attack on North Korea, or B-52s are bombing the artillery positions in North Korea, or whatever, or North Korea shoots a nuke to the West Coast somewhere, or whatever. I don't want that to happen, but what happens if we have one of those zigzags? North Korea's submarine ran into one of our aircraft carriers or whatever by accident. Just like they just had an accident with Russia, their own ship, was sunk, and it was a total accident. Didn't cause a war, but I mean, accidents can happen. How fast can the supply dry up?
That can take just a matter of hours, not even a day.
Wow.
And what you would see then would be a huge gap up in price, and gold and silver would become unaffordium and unobtainium. You just wouldn't be able to get them. And, that's the thing. I started my company. We've got a mission. We believe that there is a crisis coming that threatens people's finances, their wealth, and their freedom. And our mission is to save the world one investor at a time. And the method that we use to do that is to put gold and silver. We want to put gold and silver in everybody's portfolio. There should be some. If you had just 10% in your portfolio in 1970, before Nixon took us off of the Bretton Woods system, the gold standard, and the price of gold was allowed to float, free market on the exchanges. If you had just 10%, gold went up 24 times its price. And so even if you lost all the rest of your portfolio, if it all went to zero, that 10% would have made you 2.4 times richer. And so right now, almost nobody owns gold and silver. And I'm fully invested. That's what I do. My personal finances and my business are two very different things. And but I absolutely believe this. I started studying this back in right around the year 2000, 2001. And I decided to wrap my life around this. And I first was an investor, started buying gold back in 2002 at when the spot price was $315, and started buying silver in 2003, April of 2003, and the price was around $4.30 back then. And I've been buying, I accumulate every month, and then every time there's a big dip, I do some extra purchases. But the thing is that I was an investor before I was a dealer, before I wrote the book, and I still am. 2008 was supposed to be the event that would flush all of this out. But with all the manipulation and making the too big to fail banks bigger, and creating all of the currency that Ben Bernanke created, taking interest rates down to virtually zero, these things bought us some time, but they made the eventual crash much, much worse.
The next one.
What we're going to see is that 2008 will be a speed bump on the way to the main event. That's a term actually that my producer-director came up with, Dan Rubach, and I hijacked it. I've been using it ever since. But what we're going to see, 2000 was a stock market crash. 2007 was a real estate and stock market crash. This crash is going to be stocks, real estate, and bonds, because bonds have been in a 32-year bull market, and no bull market goes forever. It's just impossible.
I'm glad you brought that up, because you're coming from Puerto Rico right now. I didn't say it at the intro, but you're coming from Puerto Rico, and I've been harping on this, that they defaulted on $72 billion in bonds. And I asked you in the pre-interview, how's it going? He says, it's going. We don't see it, and here's why. Why don't you see this default happening? And tell me about that, why this is, am I wrong? I mean, this is a big, fat, dead canary in the coal mine that's on the, that's not an asset anymore, those bonds.
Right.
And when you talk about the asset value of bonds at default and what's going on from the Puerto Rican bond default, which they have now defaulted. You live there. You confirmed this locally. Let me know what's going on with. Yeah, go ahead.
The investors will get something back. It'll be pennies on the dollar. So they're not going to go absolutely broke. But the thing is, a whole lot of people in Puerto Rico, a lot of retirees, rely on those bonds. I mean, a lot of the people here purchased the debt of this U.S. territory. And when they defaulted, it means they don't have to make the payments. So they do have the cash to be able to pay the people that pick up the trash. The water still comes out of the tap. The lights, well, the electricity works most of the time. I've experienced 19 power outages in the year that I've lived here.
And do you think that's a function of the poor infrastructure and they're not repairing it because they have no money?
Yes, that's one of the things. And there's a huge brain drain in Puerto Rico also. The people that are professionals, many of them have left for the mainland. And what you have, if a lot of the educated people have left Puerto Rico.
Why?
Well, because you can typically make a better living. Now, I moved down here because they passed a couple of tax incentives to try and get people that have good incomes and so on into Puerto Rico to stimulate the economy. They have a 4% income on corporate flow-through profits on Act 20 for businesses that export goods, services, or information out of Puerto Rico. So that's one tax incentive. And another one that's Act 20. Act 22 is zero capital gains for 20 years.
And you're not part of the federal tax system. It's just Puerto Rican as a territory, right? Just Puerto Rico.
Yeah, you pay your taxes to Puerto Rico.
That's it.
And then you, if you have other worldwide income, you do file a federal return. But you pay your tax to Puerto Rico, and then they pay the federal government. And
totally 100% legal, and this is why you're down there. But let's expand.
This is actually the only thing that an American can do to mitigate their tax liability. The U.S. government, the U.S. is one of only 2 countries in the world that tax their citizens based on their citizenship and not their residency. If you're paying 60% tax as a French citizen, you can move to Singapore and pay 15% tax. If you're a U.S. citizen and you're paying 39.6% to the federal government and 12% to California, you can move to Singapore and pay their 15% tax, but then you have to file a federal return. You get to deduct the 15% that you paid Singapore, but you have to pay the balance of that 39.6. So the other country that does this is Eritrea, a little tiny dictatorship in Africa that can't track its own citizens. But when you're an American, there's nothing you can do anywhere. They follow you everywhere in the world, and they get their money out of you. I moved here simply because California and the U.S. and the federal government had just squeezed me to death, and I was tired of it. And so Puerto Rico offers some serious advantages. And
then back to the bonds. So we have this canary in the coal mine, Puerto Rican bonds, and everybody the stories on it, $70 billion. I remember Orange County defaulted on $2 billion, 15 years ago. That was a big deal. 70-something $2 billion that Puerto Rico is saying, sorry, thanks for the cash, dopes, is not a big deal. Can you make this a little bigger for us? That we have this downturning economy. They're not going to be, less money means they can't service debt. Like we did in Puerto Rico, they can service their people or service the debt. Well, we're defaulting. So can you expand on that canary being dead and how the bonds can be really terrible?
I'm pretty sure that we're coming up to a point where we're, before the end of the decade, we're going to be seeing a major bond crisis, and this is going to be a global event. And the reason that Puerto Rico and Greece have had these problems is because they can't paper over it. They don't print their own currency. The U.S. government runs their economy, their finances, exactly like Puerto Rico and Greece. The U.S. government and the ECB, the Eurozone is just as much of a banana republic, and the U.S. government is just as much of a banana republic as Puerto Rico or Greece. They don't understand a balance sheet. They don't understand a profit and loss statement, and you can't run your household on debt forever. You can do it for a couple of years. But you don't get the advantage of being able to print your own currency. So they may be able to paper over it a little bit. But in this next crash, the problem is, the last crash, we started with about $8.3 trillion, $0.83 trillion. And we ended up at over 4.2 trillion, about 4.4 trillion. So
that's at the Federal Reserve.
The Federal Reserve, that's base currency. That's the paper dollars that exist. Yeah. And the thing about that is, for that percentage increase, we got a certain amount of kick in the economy. Now they're starting with about a $3.8 trillion balance sheet. So in this next crash, if they do the same percentage, that takes base currency, the paper dollars, up to the same, to greater than what the entire currency supply is right now. And it means that our national debt is going to soar. And the thing is, I did a presentation at the Silver Summit last November, and one of the charts that I showed was a chart going back to like 1937 or something like that, from the Federal Reserve, showing the year-over-year change in GDP, and you could see the economic expansions and contractions. So you could see every recession and then every recovery from the recession, and the levels of the recovery have been going steadily down as we gain all of this debt that we have to service. The more debt you have, the less robust the recovery is. And now, we're talking about GDP going up by only 0.5%. Well, it used to be 6, 7, 8% after World War II. We had some really robust economic expansions. And this one has averaged around 1.5% or something like that since 2008. I'd have to have a chart in front of me to be accurate on that. But it is the weakest economic expansion in history, and it was a bought and paid for economic expansion. Every time they create currency, they are buying up. The Federal Reserve opens up their checkbook that doesn't have a dime in it, and they purchase something, and they usually purchase U.S. Treasury bonds. Since 2008, they also purchase mortgage-backed securities. The Federal Reserve is now the largest owner of real estate in the world. It's very immoral. They buy this stuff with counterfeited currency, and that is how dollars how they come into existence. The Federal Reserve writes a check, buys bonds, buys real estate, and those dollars enter circulation that way.
Now the Fed wants to get rid of their balance sheet. You heard the news where they want to sell their balance sheet. They're selling at the top, are they not?
Right. To whom will they sell? The problem is that this will cause rates to rise eventually when you have too many bonds on the market. See, in a bond auction, when the Treasury has a bond auction, the biggest banks in the world show up. They're called primary dealers. And the bank that bids the lowest interest, it's like a reverse auction. Most auctions, it's the highest bidder that wins. In a Treasury auction, it's the lowest bidder that wins. The federal government doesn't, they want to pay the least amount of interest. Here's a bond, who will buy it and pay us the lowest price? And so that's the auction that's going on. And then the Treasury buys it, or the Treasury sells it, and those primary dealers then turn around and through open market operations, the Federal Reserve opens up their checkbook, and that account has a zero balance. It basically doesn't exist. And they write a counterfeit bogus check, and they buy that bond from the banks, and the banks get to make a profit on it. And then the banks go back with the currency they just got that was just created by the Federal Reserve, and they buy more bonds next month.
You're describing a Ponzi scheme.
It is a Ponzi scheme. It's something that can't go on forever. It's gone on for 100 years now. and it just keeps on getting bigger and bigger and bigger. But we're going into, I believe, an end game for this. It's basically theft.
Wait. So let's talk about your end game. Let's finish that thought. You believe we're going into an end game? Please describe.
Well, you see the chart of base currency going along like this, and then suddenly it went like this, and it's just off the charts. That was with the crisis of 2008. We had QE 1, 2, and 3 that Janet Yellen ended just a few years ago. And so they kept on creating this currency during that period of time. But now the whole system, the monetary system, is sick. It has cancer because of the manipulation that they have done. The symptoms are not showing yet. That's the thing. You can have cancer for a certain point in time, and then you feel bad. Something feels wrong. You go to the doctor and you find out, yes, I'm going to die. That's what's happening with the monetary system right now.
It's that sick. It's that sick. Okay, Mike Maloney, I gotta cut it off right here. A very interesting guy, Mike Maloney. And when I talk about gold people, actually, gold people are. I've had this conversation with other people. They have to know about everything. They have to know about stocks. They have to know about bonds, forex, fraud. They have to know about the whole deal. That's the beauty about having gold people, that you have to be an expert in everything. Otherwise, you couldn't trade the gold market. But the book is Guide to Investing in Gold and Silver. It's an updated version of this best-selling book. You also have your Hidden Secrets of Money series. When's the next one of those coming out?
Yeah, that's on goldsilver.com is where you can find it. And we'll have another one in a few months. But if you look at episode 4, that shows you how the global economy works, how currency is created, and how it ends up robbing you. It's basically enslaving the population the way it does it. And we do animations and stuff. We have 2 full-time animators, and then if you watch episodes 6 and 7, it shows you with a whole bunch of data and information, but it's not overwhelming. It's something that anybody can understand. It shows you why we're going into this period. Part of it is like age demographics. It's the baby boom generation. It has to do with cycles. There's a whole bunch of factors going into this next crisis, and it really worries me because with great financial crisis, you very often have a dramatic political change, and it worries me that it threatens our freedom. Economics. There is nothing that will affect your life more than economics. Most people don't want to know anything about it. But if you watch Hidden Secrets of Money, you'll get a fundamental understanding of economics. It's simple, it's fun, and it actually gets really exciting when you stop teaching all of these equations of Keynesian economics.
And we're looking for number 8 for the next one coming up in the next couple
Yes, number 8.
And they're very well done. They're super well done. They're not cheap. They must cost
you. Number 8 and 9, Dan has just created a masterpiece, and it follows.
It's 9. So the next one is 9.
The next one is 8.
Oh, next one is 8.
There will be 9 right after that.
But the next one you have coming up is, which one is the newest one coming up?
The one that will be coming out in a few months is episode 8.
Oh, episode 8.
That's going to be on the parallels between the United States and the Roman Empire. And it continues with episode 9. And the current ones, though, to watch, if your listeners, your viewers, really want to get a sense of how the economy works and where we're going, and pretty soon, episodes 4, 6, and 7 are very, very important for a understanding of the global economy and all of the forces that are going to be propelling us into the future.
And they're free on goldsilver.com. Also,
yes.
You were telling me that you're going to give USA Watchdog viewers a deal. You also are a seller of gold and silver. You have some sort of deal, some sort of promo code?
Yeah, there's a discount if they just enter Greg Hunter, all capital letters, into the discount code. They'll get a discount on any purchase that they make.
Gold or silver coins, stuff like that.
Yeah.
Okay. Well, thank you very much, and I'll thank you for everybody that may use that. Mike Maloney, again, goldsilver.com, coming to us from Puerto Rico. Thanks for taking us to school on the Puerto Rican bond deal. Now this whole thing is going to get worse and bigger and worse. And that's your and that's really that you agree with me. That is the canary in the coal mine for this next bond huge crash that's coming up.
Yeah, we are Greece and Puerto Rico, countries that are places that can't print their own currency. They're the canary in the coal mine, saying that there's a bigger disaster going to happen. The entities that can print currency and paper over it, they are the ones that Puerto Rico and Greece are predicting will fall sometime soon. So that's it.
Okay, Mike Maloney, thank you so much for joining us today on USAWatchdog.com. Again, the website, goldmoney.com. Mike Maloney, thank you for joining us.
Goldsilver.com.
Excuse me. Oh, God, I'm so sorry. That's your competitor. I'm so sorry. But he's a good man, James Turk.
James Turk is a good friend of mine.
Yes. I'm sorry. Let's get it right now. Goldsilver.com is your website. All those hidden secrets of money are free on that site. Thank you so much again for joining me on USAWatchdog.com. Again, my penance, goldsilver.com. Mike Maloney, thanks for joining us.
Thank you, Greg.